Orderblocks are one of my favorite entry techniques in all of trading, and after taking thousands upon thousands of trades within Orderblocks, I know a thing or two. So in this video, I'm not only going to teach you guys how to spot Orderblocks, but I'm also going to show you how to trade them, as well as give you guys all the tips and tricks that I know after spending years mastering this one concept. So throughout this video, I'm going to give you guys everything that I know, so hopefully you guys can implement it into your own trading and become a lot better. If you guys want the most value from this video, make sure you guys grab your notebooks, take notes, and watch to the end, because this is going to be a lot of value that you won't learn anywhere else. When it comes to identifying an order block in the markets, we have to pay attention to this one word. That one word is called a change in state of delivery. CISD is pretty simple. It's where price reaches a level to where it can no longer continue going in that same direction. Right? It's when price continues going higher and higher, yet it cannot continue going higher, and it has to change its course from higher to now lower prices. Or it reaches a level to where it was going lower and lower and lower, but it could not continue going lower, and instead it found a change of course to now go higher. So this high point before this reversal in the opposing direction is referred to as a change in state of delivery, and usually this is where you can find your good order blocks. But a change in state of delivery is not enough. We need additional context behind it. It's not always about every single last up close or down close candle, but it's about the logic behind it. Why should price come back down into this last down close candle to find support to go higher? Or why should price come back up here to find resistance to go lower? This is a general gist of how I trade and teach my students. Everything has to make sense for a reason within the markets, because if it doesn't, then you're trading blind. Scenario, I will refer this as our bearish order block. Let me break it down why this is a bearish order block. Price came higher to take out this original high point. Right, this is what's referred to as a liquidity sweep, and we have to break down why does liquidity sweeps happen. Right, the market is run upon liquidity. Right, for someone to sell within the market, someone has to be on the opposing end getting stopped out for their stop loss to now offset that person's sell position. The market is constantly leaving traps, so those traders get stopped out. So we can see here that price created this down move. A lot of traders would probably see this push to the downside and think price is potentially bearish, right? And then they would put their stop losses back above this high. This is what's referred to as a trap. It creates a move to the downside to trap a lot of traders to put their stop losses up here, and then once price comes back higher to take those traders out, their stop losses is now used as liquidity to then create the real move. Right, you've probably been in this situation. You have a stop loss, it takes you out, and then it goes in your favor. That was a trap. Market is constantly leaving traps like that throughout the day. Well, after this liquidity sweep, which is a trap to then gather liquidity, we can obviously see a strong push to the downside, and obviously this push to the downside breaks back below this low. Classify this now as a market structure shift, where market structure was shifting from higher to now lower prices. From this liquidity sweep to this market structure shift, it gives us a general idea of where the market is currently at. Right now, the market is currently in a reversal. Right, most likely after taking out these traders, seeing the strong push to the downside, price reached above this level, it can no longer continue going higher. So price is obviously going to go lower. But the thing is, you don't want to short just anywhere within the markets. You want to short here because price can easily stop you out. You don't want to short here because obviously then this puts you in a position to where you could get trapped. So the best place to place your entry would be back up here. And this is why. When price came higher to take out this original high, had this market structure shift right here, this is what's referred to as a strong high point. Right, this is a level within the markets that price could no longer continue going higher, meaning that most likely price is not going to take this level out. Failed to go higher when it was up here. What makes you think it's gonna get back up there? Right, it won't. Or to frame an entry within the markets, you would be the most safe if you place your stop loss back above this high. Problem is if you short right here, stop loss would be too big, especially if you short right there. Right, it's too big of a stop loss, and this is why order blocks is one of the best entry techniques, because it offers you a position within the markets that gives you a great R multiple, as well as it's the safest entry. Taking an entry right here is not safe. Taking an entry down here is not safe. It would be very safe to take an entry back up here within this order block. The price taps into that opening of that order block right there. We can frame our short right here at the opening, stop loss just back of these high points, and we can reach just back below this low for about a 2-to-1 R. Price comes back a little bit higher, and then it eventually gets back down there. And this is why order blocks are very powerful. It's very predictable, as well as it gives you one of the best entries within the entire market structure. Guys, again, value, it only takes 1 second to click the like button and support the video, as well as if you want to work with me one-on-one to help you become a much more consistent profitable trader in the next 90 days, you guys can click the second link in the description and apply for coaching. But if you guys don't want to be coached and simply just want to trade live with me every single morning, then you guys can click the first link and join the Spark trading team. I have the Spark coaching. We have weekly calls with our students, daily live trading, as well as extensive curriculum to teach you how to trade, going over everything from technicals, risk management, psychology, and much more to help you become a much more consistently profitable trader. So if you're a struggling or beginner trader and want that coaching, click the second description and apply. One of the difficult things about order blocks is you may be in a position to where obviously you see an order block here and you're anticipating price to come back down into it, but it never does. And instead it reaches all the way back above higher prices and you miss your entry. This is a situation that happens to a lot of traders, and this is how you fix it. The last example I showed you was a reversal order block. Obviously price took that liquidity to the upside and it broke structure lower to then revisit that order block to go lower. But in some situations, price could just create a liquidity sweep and then it just break out lower. Well, I'm gonna teach you how to catch the order block before the breakout happens. See here that price created this initial push to the upside, so a lot of traders probably put their stop losses below this low or even back below this low right here. And as we can see, price came lower and stopped those traders out. It has to be a valid liquidity sweep within the markets whenever you're trading order blocks for the most part. This is our confirmation, right? Because we have to understand an order block is the last down close candle above or below a strong high or a strong low. So we have to trust that price is not going to take out this low. Trust price isn't going to take out that low is when price takes out a level of liquidity and then we see a push to the upside. In this case scenario, you would wait for a break of structure back above this high, right? You would wait for a break of structure back above this high to then pull back to go higher. But there may be a situation to where price may break through this high and continue going higher. Guys, a tip that no one teaches you, right? How to validate a break of structure within the markets is not always based upon structural points. You can actually use this fair value gap. So this is a bearish fair value gap right here. Obviously it's supposed to be a level of resistance to go lower, right? But the fact that price broke above this bearish fair value gap gives us the idea that the overall order flow of the markets is shifting from lower to now higher prices. The framework when trading order blocks is you have to identify a shift in order flow. The market has to tell you that it is currently reversing or it will not work. One of the first key indications of the market reversing is first a market structure shift, and secondly a break of a fair value gap, creating an inversion. So as we get this break above this fair value gap, this gives us the general idea that price is currently in that reversal. And obviously this last down close candle was our bullish order block, right? This was the last down close candle before we seen this liquidity sweep to the downside, right? And then as you can see, after that liquidity sweep, price found support right here, and now it's breaking above this bearish fair value gap right there. So this gives this the overall reasoning that price has found a level of support. It took out this level of liquidity, so it's not going to come back down here, and most likely we could see a strong break to the upside, reaching back above these high points. This moment I can frame a long setup right there. I don't need price to come down into this order block because I have the overall confirmation that price is reaching back above higher prices. The only thing that I need to focus on is putting my stop loss just back below this low, because I know that this is a strong low point that price should not break back below. Already see here that price already tapped into that order block, right? We had a strong bullish engulfing candlestick closing above that last stop close candle. Price tapped into that order block right there, following this break of the bearish fair value gap. So this is already our confirmation that price has found support there, and we should now expect a strong push to the upside. Now reach back over these highs for at least just a 2-to-1 R, which you can see is perfectly in alignment with this fair value gap all the way back up here. You can see right here, price finds support, sees a strong break to the upside, and it reaches back up into that fair value gap, perfectly. This would be classified as a breakout order block. The reason why it's a breakout order block is because after this break of structure, price never revisited back to it. Only way that you can anticipate this being an order block is if you see a break above this bearish fair value gap. Creates this inversion to catch a breakout setup, reaching back above these highs. Situations to where you miss order blocks because you're waiting for price to pull back into them. If you focus on this one framework, you won't have that mistake again. Next example, we're going to go over a supply and demand term called the drop base drop, and it's pretty simple. See up here, we can take note of this breakout order block. We had this bullish fair value gap right there. After price took out this area of liquidity, see, you can see price broke back below that bullish fair value gap. Obviously, you would take that breakout setup, stop loss back of these highs, reaching back below these lows. So this was that breakout fair value gap in a bearish sense. Now that we have this breakout order block, we want to pay attention to this right here. This is a drop base drop. So we can see here we had this initial push to the downside. Price created this last up close candle right here before seeing a continuation lower. Right, this is called a drop base drop. When it comes to breakout order blocks, once price creates that breakout, it's not gonna get back up here, so you're safe. Obviously, it wouldn't make sense to put an entry all the way back up here because it's not gonna get up there. This last up close candle right here, we can take note of. This is referred to as our drop base drop. If we can see price come back within this last up close candle right there, obviously it struggled to break through it, and we see it go against it, then obviously this would give us the idea that price is going to continue going lower. We can see price come back higher, tapping into that order block level. So I can place my entry right there at the opening, but in this case scenario have a bigger stop loss, which is perfectly okay. See, I would target reaching back below these lows right here for about a 2-to-1 R, which is just back below this liquidity pool right there. The trade order blocks, you want to prioritize where you put your stop loss because you want to put it in a level to where you're safe. If you put it right here, you're not safe. Even if you put it right here, you're not safe. You have to put it back above that strong high point. If in the case scenario you're trading a bullish order block, the strong low point. This then plays out. See, price struggles a little bit. It comes back higher to take out this original high. And as you can see right here, within this bigger order block, price creates a smaller order block right there. This is what's referred to as a continuation order block. It's when we have a bigger order block right here, and then price creates a smaller order block to continue that overall move. And this liquidity sweep right there, price saw this push to the downside, aiding this last up close candle. In the case that you missed this entry, then obviously you can place an entry right here. Or if you're someone like me who scales into their position, you can scale in right here. So what I like to do is I like to place my first entry right there, and then as I get additional confirmation, then I can add to that winning position. So in this case scenario, when price creates this next order block right there as a continuation order block, and I can see here that price struggles to break through it. It comes back in here once, twice, 3 times, could not break through it, and it starts to push lower. Then this gives me the overall idea that price is currently bearish and it could reach back below these lows. So in this case scenario, I would scale into my position, adjust my stop loss just back above this high point. So our original stop loss was back up here. As we get that confirmation, we can trail our stop loss even tighter. So this puts us in a position to where we're minimizing our losses. Yet if price comes back down here, instead of making a 2-to-1 R, I can make a 3-to-1 R. It increases my overall winner. Since I trail my stop loss from up here to down here, I end up risking the exact same amount. And this is why risk management in trading is so important. You don't need to be perfect within the markets. You just need to be right big whenever you catch a good setup, and whenever you lose, you need to keep those losses small. As long as you can stick to that framework, you will see success long term. This is what we teach our students, to not be perfect with the markets, but to have great psychology and great risk management and carry them long term. Right there, price comes back within that order block right there, and obviously it respected the high, did not break through it. Perfect. Now let's put this all together into a trading plan that you can trade on a consistent day-by-day basis. So personally, I trade the New York session. That's between the times of 7 a.m. EST to around 12 p.m. EST going into lunch. Coming into our markets 30 minutes before the market opens that you're supposed to trade, you want to create a daily bias, and it's pretty simple. Identifying where have you been, or are you currently at, and where do you anticipate price to go next. And let's break that down. We can see here that price came lower to take out this original low as our liquidity sweep. Right, when price created this push to the upside, a lot of traders that did not take profit at these highs, they most likely still have their stop losses back right here, or even back right here. So obviously the market comes back lower, traps those traders and takes them out and uses them as liquidity to now break higher. Now that we have this liquidity sweep plus this push to the upside, this gives me the confirmation that price is not gonna come back down here, right? This is what we can refer to now as our strong low. Obviously within this strong low point, we can take note of this last down close candle right here as our bullish order block right there. Obviously we can take note of this high as our previous daily high. Here price came lower to take out those previous daily lows. We see a break to the upside. Now if we can see price come back within this order block level and find support, we can now reach back up into these previous daily highs. Whenever I'm trading the markets, I like to stick to the higher time frames. So trading order blocks, you want to stick to the higher time frames because they create the highest probability. So time frames like the 30-minute, the 1 hour, and the 4 hour creates the best moves when it comes to trading order blocks. Specifically right here, I am on the 1 hour time frame. See price come back within this 1 hour order block to find support to go higher. You can see here price opens up. This is exactly what you want to look for. This is called a rejection wick. You can see price opened up, it came lower into that order block, and it immediately rejected from it. Not once, but twice. It came down into it 2 times and it could not break through it. This is the exact confirmation that you want to look for whenever you're trading order block. As we start to push to the upside, I can then frame my long setup. You want to have your entry either within the order block or back at least within these wicks. I'm gonna place my entry right here because this is where it closed. Stop loss back below these lows because I'm safe. And obviously I can reach back over these highs and it yields me just about a 2 to 1 R. Perfect. So I'm gonna let this play out and show you guys what happened. See here, price finds support and it immediately gets out of there. Wow, how you trade order blocks, right? A lot of it is based upon logic. The market is not guessing and it's certainly not random. Everything within the markets for why it goes higher or why it goes lower has a specific logic behind it. And this is how I trade on a consistent day-by-day basis. Someone who's struggling in trading, or let's say you're a beginner trader and you want to trade exactly like this with more logic and less guessing and go from losing to more consistent. So make sure you guys click that second link in the description and book a free call. Tell me where you're currently at within your trading journey, your current trading goals, and let's see how we can build you a system and a blueprint to attacking those goals together. If you don't want coaching and you simply just want to trade live with me every single morning, that's completely fine. That's going to be the first link in the description where you can join the Spark Trading team. It's going to be it for a video. I hope you guys got a lot of value from this video. It only takes you 1 second to click that like button and comment what you guys want to see next. If you're new to my channel, click that subscribe button because I'm uploading videos every single day to help you become a much more consistently profitable trader. And if you guys want to learn about market structure, I just released a video going over everything that I know about market structure to make you a much more consistently profitable trader. It's going to pop up on the screen right here. So make sure you guys click that video and watch it next. I'm your mentor, Arkhamtrades. Be safe.